Hey Bowtie Nation, Joseph Hogue here with a video I've been planning for quite a while. A video that's going to combine two of my favorite topics right now into an investable idea that could be worth a lot of money. Now all you out there in the nation know I love my penny stocks. This goes all the way back to my days as a venture capital analyst, finding those tiny companies with big potential. You also know we've been following that commodities boom pretty closely lately. The price of copper has jumped 118% in the last year, and estimates are that it could double again. Corn and other grain prices are up more than 50% this year, and lumber prices have surged 280%, adding an additional $36,000 to the average home building cost. Now I'm putting the two ideas together to find the best penny stocks to buy in that commodity space. These are going to be among the miners, the producers that could be your best opportunity of the year. In this video, I'll show you why the commodities boom could become a super cycle and how this translates into an undiscovered opportunity in penny stock miners. Then I'll reveal the 7 penny stocks to watch that are front and center to benefit from not only the commodities boom, but from the wave of acquisitions that could be coming. We're getting started, but you know I've got to send a special shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Nation, the commodities boom is undeniable, with double-digit price increases on everything from metals to lumber and agricultural prices. Record monetary stimulus and economic growth as high as 8% this year has Goldman Sachs predicting a super cycle in materials, as much as 5 to 10 years of surging prices. The last super cycle started in 2002 with booming economic growth in China and the other BRIC countries, eventually pushing commodity prices up nearly 160% through 2012. The price of gold jumped 573% to a record over that decade, and this cycle looks to be developing even faster, with the global commodity price index up 50% already in the last 9 months. And it's this record stimulus forcing trillions of dollars into the economy, the rebounding growth and the devaluation of the dollar that's pushing these commodity prices through the roof. But the problem is, and part of the reason for these surging prices is, you just can't flip on a switch and produce more of this stuff. It takes years to explore, test, get the permits, and then develop a new copper or a new gold mine. Total area farmed in the United States has decreased every single year since 2000. There are now 48 million fewer acres in use, producing that corn and soybeans and wheat to feed the world. This means exploding demand and limited supply should support prices for years to come. It also means because they aren't able to boost that production quickly to meet the surging demand, major players in this space could set off an acquisition boom, buying up as many of the smaller penny stock companies as possible. That's why I'm watching these penny stock companies, the wildcat explorers and the miners with the new projects already permitted and developing that could be targets for an acquisition. First in our penny stocks list is Gold Royalty Corporation, ticker GROY, a $200 million royalty company out of Canada. The company acquires royalty and streaming rights and other interests in mines at different stages of the mining cycle for just a more balanced portfolio. Now this is going to be a different model, a business model, than a lot of the mining penny stocks that we're going to look at later in the video, but a great way to diversify your portfolio of miners. Royalty companies are excellent cash flow investments because they have those rights to these mines, but not necessarily the production costs or all those other costs that go with it, so they tend to pay out higher yields. The current portfolio includes 18 royalties between 0.5% to 2% ownership on 12 projects across the Americas, and then additional rights to acquire 9 more royalties. On just the current portfolio though, that's more than 14.7 million ounces of gold on a measured and indicated basis, and over 17 million inferred ounces. And while I'm not as bullish on gold as I am on some of these other commodities, gold miners can still do really well because the cost of bullion is so much higher than their production costs. You can see here that even on a fairly modest increase in bullion, shares of gold royalty have jumped 8.8% over the last month, almost double the increase in the price of gold. So that means even if interest rates keep the price of gold range bound, miners are still going to see that cash flow continue to increase, and the royalty companies will send that cash straight to investors. The company has a strong balance sheet here with over $87 million in cash and equivalents against no debt, so lots of financial flexibility to acquire more projects, more of those rights that they need. I'll leave a link to the company's investor presentation in the description below if you want to check that out. Next here is $350 million Talga Group, ticker TLGRF on the OTC market, an integrated producer of lithium battery anode products out of Sweden. The company is building a graphite anode facility to produce low-emission coated anodes for lithium batteries. It also owns high-grade graphite projects in northern Sweden, close to those battery mega factories. batteries. So Talga isn't a pure play miner here, but an integrated company with resources and the production in one of the hottest trends right now, lithium-ion batteries. And like most of the penny stocks on the list, Talga is very much a pre-production company, but has its permitting and approvals underway to begin. Actual production is expected to start in 2023, but this company could become a takeover target even before that on that low-cost battery anode production. The company has a net cash position with $32 million on the balance sheet against just $157,000 in debt, so it does appear they have that financing and the cash needed to make this project a success. Next here is a penny stock under $1, Great Panther Mining, ticker GPL, a $290 million gold and silver miner. The company operates mines in Mexico, Brazil, and Peru, and actually grew production last year when most other miners saw it drop due to those pandemic closures. Revenue was up 31% last year to $261 million, and even more importantly, the company lowered its production costs to an all-in sustaining cost basis of just $1,228 an ounce. Now, even on guidance for this year for an increase in that to $1,400 in AISC, that still leaves a lot of room for profit on the current gold price. Great Panther has $63 million in cash and equivalents against just $33 million in balance sheet debt, so more than 10% of the market cap in this company is net cash. I highlighted Tombstone Mines, ticker TGB, in a video mid-January when it was trading at $1.39 per share. It's up 63% over the last 4 months, but could still have that upside potential on the trend in copper prices. Nation, between the economic growth that we're already seeing come through and the potential for that infrastructure spending, copper prices could continue to rush higher. Taseko is also further along than some of the others on our penny stock list, already producing out of that Gibraltar mine. It's got near-term development in Florence, Arizona, and 3 longer-term projects in Canada, on top of 60,000 tons of production with a remaining mine life of 18 years at Gibraltar. The Florence and other projects could add another 125,000 tons of productions at a cash cost as low as $1.13 per pound. The company booked $343 million in revenue last year and should turn profitable this year. Now, the balance sheet here isn't quite as healthy as I'd like to see, with only $86 million in cash against $363 million in debt, but this is a revenue-generating business, and its cash flow shouldn't be a problem with those rising copper prices. Nevada Copper, ticker NEVDF, is the lowest stock price in our list, though not the smallest company by market cap, at over $430 million. The company has 1 mine in production with expansion upside and another permitted, both in the western Nevada near the Reno Industrial Center. With reserves of 4.4 billion pounds and an estimated additional 2.6 billion pounds of copper in that exploration upside phase, the company is primed to benefit from that boom in copper prices. Now, it's got just $22 million in cash versus $204 million in balance sheet debt, so quite a bit shakier here on those fundamentals, but a strong leverage to copper prices. With copper now at about $4.72 a pound, the project value is well over the $3 billion on an NPV basis. Uranium Royalty Corporation, ticker UROY, is another one that I highlighted on the channel back in mid-February at $2.33 a share. The shares have jumped 50% in the 3 months since and are now trading on the NASDAQ under the new symbol. URC is the first company to apply that royalty model to uranium assets, so it has that partnership interest in uranium projects. It's receiving those cash flows and passes that through on to investors through a dividend yield. The company has a diversified portfolio across North America and in every stage of development, from permitted projects, production, and exploration. Its partners include some of the largest uranium miners in the market, like Cameco, Rio Tinto, and UEC. And you can see how this is set up. For example, the company has a 9% interest and a 1% gross overriding royalty in the McArthur River project run by Cameco in Canada. The project is licensed to produce 25 million pounds a year with proven and probable reserves of almost 392 million pounds. The company has a strong balance sheet here with $38 million in cash and securities for acquiring those assets. Again, this is a royalty business model. The company is like a fund of projects that's going to benefit from that investor interest in the assets without some of those operational and production mining costs. So URC has those fixed operating costs, no development, no capital costs, just a steady cash flow from that diversified stream of royalties. Another copper producer here, Amerigo Resources, ticker ARREF, just popped over $1 per share and $212 million market cap. The company owns the Minera Valle Central project in Chile in a partnership with Codelco, the world's largest copper producer. Now, the project has ramped production from just 26 million pounds in 2003 when it was acquired to over 55 million pounds last year. The company has a long-term power supply contract that locks in a big portion of the cost and is highly leveraged to copper prices. At around $4.80 per pound, Amerigo is forecasting $79 million in EBITDA earnings. That's earnings before interest, taxes, depreciation, and amortization. The company booked $159 million in revenue over the last year and 212% growth in the last quarter, so definitely one to watch here. Click on the video to the right for the 7 penny stocks that pay dividends, penny stocks that actually pay you while you hold the shares. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.